Good morning, everyone. Welcome back to another portfolio review. Got some updates for you today. Kind of exciting ones, I must say. Got paid today, invested some money already, so we'll just kind of talk about that. As you can see down in the corner, it's 8:30. M1 Finance hasn't done its trades yet. So there is some liberties that I've taken as far as what my portfolio values will be when I get to the net worth tracker part, and we'll kind of cover that some more when we get there. But as far as Robinhood's concerned, it's up to date. As you can see, the market is just open now, 8:31. So you're going to see this move around quite a bit, but not a big deal. There's some more permanent stuff that I want to talk about. So let's jump into the history. Hopefully I don't give away too much. But there's going to be a couple things in here that I want to show you. Just the purchases that I made today, kind of explaining the reasoning for that. If it'll even load. That's, I guess, a good place to start. And then the other thing is the dividends that are coming up. So really quick, kind of sliding down. But 4 more shares of Wells Fargo at 2207. So that's kind of the lowest that they've been for me. When we look over into the stock portfolio, you can see the 52-week history. Actually, we'll just slide over there now. So Wells Fargo, you can see that $22 is their lowest they've been. So right now I'm grabbing them at the lowest they've been in a year, close to it. So wanted to nag a couple more shares just because I think, like, despite what you may feel about Wells Fargo in terms of like a company overall, I would never bank there just because their fees, I think, are a little ridiculous. But at the same time, they do a lot of investing in a lot of everything. They sponsor a lot of things. And when I think about my history with my previous job and now this job, Signet Jewelers, which owns Kay, Jared's, Zales, and James Allen, they all bank through Wells Fargo. So just think of like a huge conglomerate of jewelers alone that bank there. So obviously they're still getting money. And then at where I currently work, Lasker's, we do financing through Wells Fargo's. So just those two examples right there, like Wells Fargo's one of those big banks that's found everywhere. So despite how you may feel about them, I do have a lot of respect for Wells Fargo, that they're doing a lot of good business adventures. They may be valued really low right now, but I think they're a good company to invest in, and they pay a pretty good dividend, as I'll show you once we get up there. Coca-Cola doesn't really need an introduction. You know, they're going to survive through this. And if we look, again, if we kind of slide over here, Coca-Cola, not quite at their 52-week low, but I don't think they'll go that much lower. But bought a couple more. And they're defensive. They're a consumer defensive. So they may slide down, but they're going to recover faster. So had to put some more money in there. Did a couple more bigger purchases today. Usually I try to spread it out if I can find it. Yeah, usually I try to spread it out and try to get more rather than just a couple. But yeah, you can see that when these are as low as they are, the money goes a little farther. And then I decided to balance out American Airlines and Delta a little bit more. I think I had an average of like $11, $12 for American Airlines. So buying 5 shares at $8 brought it down a bit. So now my average for them is $10, and then Delta's the same thing. Buying 2 more shares at $18 brought my average down to 21, where before, like, these 3 used to be about $25. So that helps quite a bit. So now the gains will be a little bit better. But yeah, so I got some more purchases in, really exciting. Definitely could have put in more, but as we'll go into the net worth tracker, I decided to be slightly more responsible and kind of hold it just because I don't know where the market's going. And I'm pretty happy with the amount of investing that I've done these last couple months. So I decided to put $200 towards some more of my loans. Well, one of mine specifically, and we'll kind of go over that as well. And that's another liberty that I've taken just because it hasn't settled yet and whatnot. But sliding up here, dividends. This is what we have moving forward. And this is the one that I saw that really got me really hyped up, because before, my highest dividend was, I think, last month, if I can find it. I think Altria Group was the highest. So 336 was the one to beat. Well, there we are. Energy Transfer at 458, and then Wells Fargo smashing it at 969. But that's because I have a lot of shares. I mean, if we click into it, you can see that I have 19 shares at 51 cents. That helps quite a bit. But then we also have British Petroleum, 7 shares at 62 cents. So that's also smashing it as well. So, I mean, 3 dividends right there that, equal to quite a bit. So when we get over to the stock portfolio piece and we kind of talk about that some more, I'll kind of show you some things that I've updated. But I mean, that's really awesome. We're only in May and we're already getting these dividends. I'm really excited to see, later in the year and also December. Also by the time Wells Fargo pays again, because now, let's see, I bought another 4 shares. So that should be an extra $2 on top of that next time. So next time we'll see it at like closer to $12. So just growth every little bit here and there. So we'll see this in May and June. So hopefully by July and August we can see even better dividends. But as it sits right now, I'm not slowing down. So we'll keep cruising along. So yeah, really exciting stuff. That's kind of more so what I wanted to cover in this episode, was that dividends are rolling in. We're starting to see bigger ones. Starting out, like, they're only like 62 cents used to be my highest. So now we're starting to see where this 3,500 is coming from. In terms of like, this is what you can start to expect from dividends. Obviously, if I cut out Ford, I sold off Zynga right away. I skipped completely a lot of these companies that don't pay very much, don't pay at all, and I just started like putting it in Kraft, putting it in like Wells Fargo, and for fun we'll say Coca-Cola. Yeah, I probably get a lot bigger dividends, but I wouldn't get them nearly as often. So that's kind of, there's both sides to diversifying and not diversifying. If you don't diversify, you can get bigger dividends less often, or if you diversify, you can get more dividends less often. And it's kind of like that, the debt snowball. It may not be the most mathematically, it may not make the most sense in that way, but it gives you the motivation. And this is that motivation that I see, every day I check it, or every week I check it and I see these dividends. Like, this is the motivation that keeps me going. Yeah, it may only be 30 cents, 60 cents, but I was hyped up on 2 cents last October, I think. So, having something that is a whole lot more, we're now into like having multiple ones that are more than $1 and a multiple that are over $4. Like, that's huge. Granted, it's not going to buy me a whole lot right now, but if I have a month where I get 4 or more, that can start buying more shares of companies. So yeah, so really exciting for stuff like this. Yeah, I think that's all I really wanted to cover on here. This is just going to keep going up and down. I mean, if we look at the last week, it's not been a very pretty week, going down nearly $200. The last month was good. Like, we were at a point when we were doing pretty well, and then bam, now we've slid down a little bit. So if we look at the all-time, how much money have I put into this portfolio? $4,000. So now between both of these, we should be at about $8,000 total, but currently it's not valued as such, but we'll get there. We'll definitely get there. But yeah, there was like a point where I like evened out and I was actually like a little bit above, but that was April. Well, that was like the end of April. And then right now we have a lot more fears of the coronavirus continuing to spread. In my state in particular, we've been really good as far as numbers, and then all of a sudden we just got hit with a huge amount. However, our governor has said there's no stopping it now, so he's just going to open businesses, I think was kind of what he came to. And then futures wobble as far as jobless claims, but with the governor opening up specifically our state, I think that should help, and I'm sure a lot of other states will continue to follow. States like Texas, Florida, California, New York, I saw Michigan was also pretty bad too. Like, those states that have a lot of claims, like, they're eventually going to get through this soon and they're going to start opening up. So I think people's fears are kind of, we'll say, irrational. For me personally, obviously there's people out there that could seriously still feel scared, and I can understand that. But for me, in my position, I think we're okay. So, might as well take advantage of people's insecurities. But yeah, so there's a lot of good articles to read through if you guys are, if you do have an M1 Finance or Robinhood portfolio. They have these news articles. Go ahead and read them. So they're good reads. Gosh, I was logged in and then I wasn't. So that's how that goes, I suppose. So once we log into M1 here, we can see that we're just waiting for the trade somewhere. Right here. See if we can view the details. Oh, guess not. Sometimes you're able to see like what it's going to buy. Oh, upcoming trades. Duh, here we go. So you can start to see some of the stuff that it's going to buy. I don't know if I like the whole excluded because less than $1, because some of them are really expensive. But it is what it is. I suppose, if I had a couple more cents, it would buy them. But so not much to really go over. Real estate's fallen below healthcare, even though I have put real estate to be at a higher percentage, but it is what it is sometimes. But you can see some of the ones that have started to come out of the drought a little bit. Bonds have started to recover quite a bit because people are starting to move their money from stocks to bonds. So that's going to increase the value of them. Healthcare obviously has been doing well because, what isn't open nowadays that's about healthcare? And tech, the ones that we have aren't going to really be blowing up as much as some of the other ones. But if you think of like companies like Zoom right now are like doing incredibly well right now. Actually, I don't know how to do it on M1, but if we take a look at Zoom, they're a company that right now is just doing well. Today when everyone else is dropping, they're going up. If we look at the last week, while everything was coming back down, they just keep going up. $9 in the last week. If we look at the last month, yeah, they had their peak as well on that same day. It fell a little bit, but they're also recovering a lot faster. And then if we look at the last 3 months, which, as we know, in the last 3 months, everyone has just gone to crap. Like, they hit that crash too. I think it was... I don't know when exactly the crash was, but I'm pretty sure it was like right around here. And on most other stocks, you can tell right away. But then they recovered so fast. And in the last 3 months, they're up $74 now, $74.12. And I'm sure this number is just going to keep going up. Yeah. So, tech is going to be recovering pretty well because a lot of people are doing stuff online. So, something to keep in mind that right now may not be the best time to buy tech because they're doing so well. But, in the long term, they might be a good thing to start in right now because it's going to grow in the future. Like, this whole happening that's going on right now is changing the future. Like, retail is going to be changed. Food service is going to be changed. I'm sure that plexiglass and wearing gloves and wearing masks is going to be the new common, even if we didn't need to, or don't need to, I should say. So, yeah. So, not much to really talk about right here. Not much has changed just because there isn't much for me to talk about. Like, oh, I invested in this. Here's why. These are just all these companies that I invest in, and I'm always going to put a little piece here and there. And as far as dividends, not much has happened in the last couple weeks. Bonds paid out pretty much all on the same day. So not huge amounts, but, we're starting to see a little bit less so in M1, but still we're starting to get the couple dollar ones here. JP Morgan's close. We had one from Store Capital for $1.20. So it's getting there. It just takes a little bit longer because if we look at the holdings and we do it by shares, there's some that I have pieces of a share, like such a small amount. Like New Residential, I have 10, 6, 5, 3, 3, 2, 2, and then after this point, now we have fractions of a company all the way down. All these are fractions of a company. So you need to have a decent amount of money in it for you to start getting those full shares. So I'm only getting fractions of a dividend. Where when we look at Robinhood, I have the same money in each. But these are all full shares. So I'm going to get the full dividend when they pay me. Now, this isn't even, where this, in a sense, is even. Like, I have put the exact amount of money for the percentage that I want to put it in. But it's the same thing that I was talking about earlier. I've diversified more in this portfolio, so I get paid more often, less. Where M1, I get paid less often, but bigger amounts. So that's kind of that's exactly what I've been talking about. So yeah, this is good because this portfolio is going to be very balanced. It's not going to lose as much. It's not going to be hit as hard. It's not going to recover as fast as, say, this one might. You know, you can see these big spikes up and down, where this one is a lot smoother. Granted, it kind of shows it in a different way too, so that can be tough to compare as well, but overall it's about the same. But yeah, next time I will be able to show you. I get paid in 2 more weeks, so we might be able to do another video for the month, or I might just wait until June and do like a May portfolio update when I've got the M1 information. But we'll see where I'm sitting at and see what's changed, and maybe something needs to be covered. In this time, like, things change so fast, it's hard to do like one video every couple weeks. But yeah, you can see that just like when the stock market was steadily rising, like it was just so flat. And then now that we've had all this turbulence, that'll be fun to look back on. That's for sure. So we've kind of taken a peek at this already. Not much has changed too much. But you can see the pies have changed a little bit. Again, I haven't added new positions, so this isn't very interesting, I guess. And again, if anyone ever wants me to show how I made this portfolio, like this is one that I did myself, with all the numbers and whatnot, I'd always be happy to kind of go over that. As we can see, this is how much money we spent, so kind of lines up with what Robinhood is saying. So we've now kind of crossed the point where we've put $8,000 into the stock market. And that's a lot of money. Like, that's just crazy saying it out loud. $8,000. So that's pretty exciting. Getting all these updates of price changes on Robinhood. It's too late now. So let's take a look over at the slide, the dividends tab. Lot to look through. We'll just kind of go top to bottom, left to right. So right now I have the dividends that I've been paid so far up to this point, and I updated this. I don't trust what the sheet told me. I did the math. I checked it 7 times. 773 is what I got paid. I'm sticking with that. So I don't know what happened on the Robinhood thing where it was wrong, but 773 is what I officially got paid. So I'm sticking with it. So as for what I've been paid and projected to be paid for, 623. Obviously, we still have the rest of the month to go. And there's some companies that don't announce their dividend until like the day before, and they pay it like the next day. So we'll see where this goes. As for June, I have 2 companies, just 2 companies that have announced that they're paying dividends, and I'm already at $14. That is absolutely wild. So pretty cool. The other night decided to update this because I wanted it to be a lot clearer and a lot more visually appealing, I'd say. So I still have the monthly dividends and I have the yearly dividends, but they're on 2 separate sheets just so it's a little easier to see like the huge growth. So if I to next year got paid $16, so now it's going to update. It's going to add 2021 because that was one thing that was missing before, is I couldn't figure out how to get the colors labeled. Somehow I did. I don't know how I did it, but I did it. So now this one isn't labeled because there just wasn't enough room, but and then we'll do $18. So now we can start to see that year over year we can have the growth. So maybe we'll do 15, 17. So now we'll kind of see where that trend, where year over year we're growing. I don't know if it'd be that much, but it honestly could be. And then we're also seeing that it's growing this way. I may have to change the numbers so it's maybe not so intrusive. As of right now, it's fine, but as you can see, like later years, they can kind of be in the way. But you can then start to see where these start adding up. But I just like overall how that looks. And then if I can do it something like this where I get $55 this year or whatever, you can see the huge growth, but I don't know if I'd have that much. I meant to do $5, but yeah, I like these charts. Hopefully you guys like them better too, that they're a little easier to see, a little bit bigger. I like having the values right here so we know exactly like this should match that. Granted, you could look up in the chart, but that's not, or the table, but charts are easier to look at and they're visually appealing. So hopefully you guys like this. I love it. It took me a couple hours to do it, to figure it out, because it's not as easy as you'd think. Got my projection dividends updated for today. So I made the changes of Wells Fargo being at 23. So now they're up to close to $50 a year that they're paying me. $50. Let's take a trip down. Oops, that's too far down memory lane. If we go back to the beginning of this year, the total yearly payout I was getting from all of my companies was $54. All of my companies put together, $54. And now we're sitting at a company that's paying me by itself $46. It is a slow process investing. You are not going to get rich, but I'd be damned if I said it's not rewarding, knowing that in 4 months, I'd be going from my yearly total dividends being at $50 some dollars to now one company just paying me $46. That's awesome. Absolutely awesome. So I got that updated. We've got Coke on here somewhere. KO 1640. So that's awesome. And then we've got Delta Airlines at 9 and American Airlines at 480. Again, it's not about putting it in the companies that pay you the most. It's just about broadening your horizons, you know. Delta and American Airlines may pay on the same day, they may not, but now I'm getting paid more often less, which is fine. I mean, look, Mazda, probably a mistake. My friend's like, "Oh, Mazda's so cool, you should invest in it." I was like, "Okay, whatever, sure." And yeah, that's not the case. So hopefully when things recover, there will be ones that I take out, and you know, that's just part of the journey. Is there are a couple companies that I am planning on. Like, I'm a dividend investor. Zynga, cool, growth company. I don't really see them growing too much more, so they'll probably be sold. General Electric, as they sit right now, they're kind of just, I mean, at 2 cents, or actually 4 cents a year that they're paying out, like that's just a joke. So again, there's still a lot of deciding to go through, and if I actually want to, but there are definitely companies that I would be okay with selling off. But I want to, like, I'm definitely the person that wants to make my money back, so I wouldn't sell it right now and realize the almost $7 in loss. Although this isn't totally accurate, because I got one free one and I paid for another one at $8.91. So realistically, I'm actually making money. So that's the only one that's a little wonky. Actually, let's take a peek really quick and see what General Electric says. Actually, I think it's better on the app, unfortunately. So I know you can't see this, but that's how I've been using to determine what the buy price is. Okay, so it says average cost is $8.91 because it gave me a free one. But anyway, we'll cross those bridges as we get to them. And what I do decide to sell off, I'll definitely make a video about it before I do it, maybe. Or just talk about the after effects. M1 Finance portfolio hasn't changed. Still has the previous numbers from last month, but I realized I should probably start showing this off more often because not everyone watches every video. I don't have that cult following yet where at the end of the month or the beginning of the next month, someone's going to come and watch this video to see my M1 Finance portfolio. But I figured I should show it off. This is not a chart that I've made. This was created by I don't know if it was created by Joseph Carlson, but it was developed for his show, or someone created it for his show. So this has a lot more numbers on here that I don't necessarily know how they calculated it. Like you can see, look at that Look at that sequence. And then we look at mine. It's like, there we go. Really simple number stuff. So, I mean, I figured it out. Like the monthly dividend amount. So this should be what I earned. Portfolio value, obviously what my portfolio is valued at. Month over month growth rate. So you can see that I had like 80% growth, which actually kind of makes sense, I think. And then 19%, 63%. I don't know how it's calculating it, honestly. Maybe if I went from like 400 to 800, it'd be like 100% growth. But we'll see. But yeah, and then we have average monthly income, which is generally kind of what I'm looking at, is what is my average monthly income. So you can see that it was $493 for this month, and we were just over. And we've kind of done so actually for the last couple months. And then this calculates what my yearly income will be, my average income. And that's what this is showing right here. So when I am showing you this number right here, this is technically it's a little less accurate, possibly. It might be about the same, but this is at $60 and the other one was at, I should have remembered, this is at $227. So I would theoretically add those two numbers up, and over the next 40 years would be my bonus income that I've made that I can add to portfolios. So just for fun, to hopefully get people interested, I still didn't remember. 227. My phone's going wild. So $287 is theoretically every year what I'm getting. Doesn't compare to like $20,000 a year, which would basically cover my expenses and I could be financially free, but work in progress. And then times that over the next 40 years, that's an extra $11,000 in my pocket that I'm getting paid for just having this money sit. An extra $11,000, nearly $500. It's probably a little bit more because this isn't up to date in the sense that I'm able to update my stock portfolio, but in the end, $11,000. That's absolutely crazy. And this is money that I'm definitely going to put back into my portfolio. And right now, it's sitting at $8,000. But again, this is where that growth comes from, that exponential growth. And then we can kind of again see what my monthly income is. It's hard to show because I'm using my hands, but it's continuing to move this way, and that's the way I want it to go, is always up. Yeah. And then the portfolio value, it looks like I didn't do anything, but this is when we were having that crash and I was adding money to prevent it from falling more. But we're getting close to the 30-minute mark, so I got to try to wrap this up here soon. So I updated these numbers mostly. These assets I haven't updated yet. I'll probably do that officially at the end of the month and see what everything's worth, and it's going to hurt my feelings, but that's life. Liberty number one that I took is I just took $200 and subtracted from what it was before. It won't exactly be that. It'll probably be a little bit more just because of interest that's been paid versus the principal. So just saying. Values have stayed the same. These are the most up-to-date-ish numbers I have. Liberty number two, M1 Finance. I just took what it was, or what it currently is, plus $300, and roughly that's about it. Robinhood was up to date. We'll see if it currently is. $34.87, and it's gone down. So since I started recording, it's gone down. That's fine. Retirement account, that's currently what it's at. And again, why is it stagnated for the last couple months? Because I no longer work at K, no longer contributing to my 401k. So that's why that is. Savings up to date. This is what will be left in my checking after everything settles. For my total assets being at 36, my total net worth being at $24,985.10. $15 away from $25,000 in a net worth. That is superb. And I can guarantee that is going to happen very soon. I am getting paid once more this month. I'm sure something will happen, or it will be within these two, or these 3 rather. Something will happen where it'll just go up $15 and I'll be good to go. So really exciting stuff. Getting loans paid down feels good. And then the last thing that we'll cover, Debt Snowball, updated it from last time. I didn't have it updated, I'm sorry. Put in the new number. So we have paid off $6,000. Total remaining is still a dreadful $11,000. But once we get that paid off, it will feel very, very sweet. So ideally, I don't want to have to pull from my portfolios to pay it off. But honestly, it might be something that I will think about, because that will be a guaranteed $330 to put in every month on top of what I already invest. Technically, that will probably be transferred towards like bills and stuff when I move out and I'm on my own. That $330 will be very useful, but that's $330 that I am paying towards stuff that I won't have to be paying towards. So a lot of things to consider in that sense. But it'll feel really good once that is paid off, and I will be really excited. But yeah, a lot of good things coming this year. I think my goal is to have my portfolio values at $10,000, and I was like, yeah, I don't know if that's gonna happen. You know, $5,000 in each. And look, now we're, oh my gosh, that logged out again. But now we're sitting at what I've put in at $4,000. I only have $1,000 to go. That's insane. And then this one is currently trading because trades in progress. And now this one, 37, but it'll go up another 300 once the trades are done. But I'm $2,000 away from my goal. I never thought that was even possible. So goal number 1, get my portfolios to $10,000, like combined, check. So now we just got to sell the Mustang. That's the other goal. And hopefully we can then use that to pay off this. And I'll be looking good. I'll be looking real good. Just got to wait for people to have money. Although people are buying stuff, so maybe I'll clean up my Mustang, get it all fixed up, and maybe list it and see what I get. But that takes care of me for today, guys. I want to thank you so much for stopping by. I know this is a bit of a longer video, but I had a lot more to talk about. Cool things are happening. Good things are happening despite, you know, the market going to the tank. But, you know, it's the long game. You know, if I was looking to make money in the short term, I missed out on my opportunity to sell and make money. But I'm really excited for good things coming ahead, and I want to continue to record my progress, and hopefully you guys enjoyed. Thank you so much. Stay healthy, stay happy, and take care.